Hey everyone, welcome back to Corporate Decoder, the place where we try to decode the whispers in the financial reports to uncover the roaring truths about companies. Today we are diving into Social Commerce Partners Corporation. Their latest filing might just reveal how they're planning to shake up the social media shopping world. Before we dive in, if you love getting straight to the point financial insights without all the corporate jargon, make sure you hit that subscribe button. And if you want to join our growing community of financial sleuths, check out the Discord link in the description below. Alright, let's get into it. Social Commerce Partners Corporation recently filed a current report on Form 8K, which basically means something significant happened that the public needs to know about right away. Think of it as a company's urgent bulletin to investors, and it looks like this filing is all about their big debut. The main story here is the company just wrapped up its initial public offering, or IPO. This is when a private company sells shares to the public for the first time, becoming a publicly traded entity. They offered up 10 million units, and each unit was a package deal, one Class A ordinary share and half of a redeemable warrant. These units were sold at $10 each, bringing in a cool $100 million. Pretty standard for a company looking to raise capital, but that is not all. Alongside the IPO, they also did a private placement, meaning they sold shares directly to specific investors before the public offering. They sold another 350,000 units this way. These private units were also priced at $10 each and brought in an additional $3.5 million. Half of those private units went to their sponsor, Social Commerce Acquisition Partners, LLC, and the other portion went to BTI, which was the representative for the underwriters in the IPO. Let's break down what these units actually mean for investors. You get a Class A ordinary share, which is essentially a piece of ownership in the company. Then you get half of a redeemable warrant. A warrant is like an option to buy more shares later at a set price. In this case, each whole warrant can be used to buy one Class A ordinary share for $11.50. So if the company's stock price goes above $11.50 later on, these warrants could become valuable. Now the company itself is Social Commerce Partners Corporation. They are incorporated in the Cayman Islands, but their principal executive offices are in Plano, Texas. They are also flagged as an emerging growth company. This means they are a relatively new business and get to use some relaxed rules for reporting financial information for a period of time. It's like getting a beginner's pass in the corporate world. The real juicy bit often found in these reports is what happens with all that money. According to the filing, a whopping $100 million from the IPO and the private placement, which included that $3.5 million in deferred underwriting commissions, has been placed into a trust account. This trust account is set up to protect the investors who bought shares in the IPO. They also included an audited balance sheet as an exhibit detailing how the money flowed in. So what's the big picture here? Social Commerce Partners Corporation has successfully gone public, bringing in over $100 million. They are structured with shares, and warrants a common strategy for this type of company. The funds are largely secured in a trust account, indicating a focus on responsible management of the IPO proceeds. Now, looking at this from a business perspective, it's a strong start. Going public is a massive undertaking, and its completion with substantial capital raise signals significant investor confidence. The dual approach of an IPO and a private placement allows them to raise funds efficiently and from various investor pools. The structure of units with shares and warrants can also make the offering more attractive by offering potential upside through the warrants. However, there are always risks. The success of the company will heavily depend on their ability to execute their business plan in the social commerce space. The value of those warrants also hinges on the company's stock performance. If the stock price doesn't rise above the $11.50 exercise price of the warrants, they might not be worth anything to the holders. The emerging growth company status, while beneficial for the company, means they have less of a track record and potentially less scrutiny, which investors need to keep in mind. In conclusion, Social Commerce Partners Corporation has made a solid entry into the public markets. They've secured significant funding and set up a structure that appears designed for growth. The key will be their execution and how effectively they leverage this capital to build their social commerce ventures. It's a promising start, but like all new ventures, there are inherent challenges and opportunities ahead. Alright, that is our breakdown of Social Commerce Partners Corporation's latest filing. What is your take on their IPO, and what do you think this means for the future of social commerce? Drop your thoughts in the comments below. If you found this analysis valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate financial reports. Don't forget to join our Discord community linked in the description for more real-time discussions. Thanks for watching, and well, see you next time on Corporate Decoder.